Despite global crises and a weak peso, the number of millionaires in the Philippines is still rising. But as global capital flows shift, the question is whether the country can keep that momentum or get left behind. Jin Kim has the details.
Despite escalating global tensions and surging commodity prices, the Philippines continues to create wealth. According to the 2025 Henley and Partners' Private Wealth Migration Report, the country now boasts nearly 12,800 millionaires, 70 centimillionaires, and 12 billionaires, reflecting a 32% growth in the ultra-wealthy segment over the past decade. Still, the report estimates that around 50 Filipino millionaires will migrate abroad in 2025, far lower than regional peers like Vietnam, which is expected to lose over 300.
So, not a big number, and actually probably not something to be very concerned about. Philippines, compared to its regional neighbors, is losing much less.
This year, global wealth migration is expected to reach record levels. 140,000 millionaires will relocate internationally in 2025. This number could rise to 165,000 by 2026.
This year marks the largest voluntary transfer of private capital in modern history. Wealth migration signals a global shift in economic power, so it's not just a demographic trend. Countries are racing to attract both talent and capital and reshaping financial hubs and prosperity zones.
The United Arab Emirates is set to lead, attracting 9,800 millionaires this year, representing a capital inflow of around $63 billion in investable wealth. On the losing side, the United Kingdom will see the biggest exodus, over 16,000 millionaires leaving, taking an estimated $92 billion with them.
This is the largest single-year outflow that we've ever seen. Brexit continues to prove to be a bad bet to attract and retain high net worth individuals, but the real genesis of this huge outflow comes from major tax changes that were confirmed in 2024.
As oil prices climb and the Israel-Iran crisis unfolds, more high net worth families are seeking alternatives and Plan B destinations.
Any instability in global politics or global markets, including influxes in commodity prices, create insecurity that would push families to consider optionality. When it comes to these conflicts globally, or when it comes to economic shocks, it's important that families have other options.
The firm also sees opportunity, saying a weaker peso could offer an opening for foreign investors.
With a weaker currency, it would mean that foreigners coming in can afford more, so would make it more attractive.
As millionaires and billionaires shift across borders, the challenge for the Philippines is to capture a share of this trillion-dollar capital flow and turn it into investment gains. Jin Kim, Billionaire News Channel.